Hey Dwight, how you doing?
Hey Mark, I'm good. How are you?
Yeah, hectic day as usual.
Yeah,
Um, are we live or?
yeah, we're live. We have close to 100 people in so far.
Yeah, I see that. Okay. We're about 2 minutes ahead. If you want to start a counter or something.
Yep, sure thing. I'm gonna drop the YouTube link in the chat for you.
All right, thank you. Want to start a counter or something? I don't see the counter, Dwight.
Yeah, I was gonna bring it up, but you're sharing screen, so um, it's not gonna show. And we're 30 seconds out, so you can
Just start. All
edit.
right, I'll just start on the hour.
Sure. Yep, sure thing. Uh,
All right, welcome to this second day of this live event. This is a live event. Sometimes I get asked that. This is real time. Welcome to the second of the 4-day trade execution webinar series subtitled How to Capitalize on Monster Moves in the Markets. My name is Mark Shawson, the pattern trader. Yesterday, I gave a brief introduction of myself and my price action, price pattern trading methodology. If you weren't able to be here, I'm actually just going to paste a link in the chat box here. This has our strategy. It's also time tested. It's scientifically tested. I assigned our team about a year ago to see if there was any validity or any basis to what I'm doing. And they found, thousands of scientific models showing that when a pattern is identified, it actually goes in a certain direction for at least 100 days. So to my mind, pattern equals trajectory. So I try and find trends or patterns that tell me where, I should be looking. Should I be going long? Should I be going short? And then I, try and hone it in by, looking at these key reversals, these inside bars, some other things that we talked about yesterday, how to hone in on a high value trade. Today, I'll be talking a little bit about risk management. So let me just kind of go through, I try and be transparent, show you what I'm doing. So yes, on Friday, based on the patterns I was looking at, I started getting heavily short on all of the stock indexes. So these are my positions that I established on Friday, and I'll just kind of go through them. I closed all of them out today, but let me just try and go through them here. So I was along these put options. A put option is a bet on the downside of the triple Qs. The triple Qs are an ETF that approximates the NASDAQ. So if you want to, bet on the downside of the NASDAQ, you just either go short the triple Qs, or in this case, I bought these put options, which are very leveraged bets. There was a rally today. I actually increased my put options significantly into the early morning rally, and then markets plunged. I got out of it. And, same with the Dow. I was long these put options on the Dow. The Dow fell about 600 or 700 points today. I had 300 units, and I made anywhere between, I don't know, $90,000 and $120,000 on this basket of indexes. I also had the IGV. units. So, so I'm trying to, so, I put in about 48 grand. And right here, you can see I put about 48,000 into these options and made anywhere from 90 to 120,000. I don't look at my losses and I don't look at my gains. I just see if a trade is winning. I see if a trade's losing, what I should do. I look at the trade itself, and then I clear it out and start it all over again. And so I was also short DraftKings. I got out of that, opened down about $1. I was short Upstart. It was down about $10 today. And then this stock was up like $4, so I lost money on that. So all told, I don't know, made about 120 grand on these positions. And then I also had some positions that I closed out in the FX space. I also did some spot selling on Friday. You can see the 16th, I started selling the US 100, which is the NASDAQ, and this is the Dow Jones. And all told, I banked, I'm just approximating about 100 grand on these positions, and I closed them out. And then I likely dipped my toe in buying some Alibaba call options today in the sell-off when Alibaba was going around 112. I bought these call options for about 390, and they closed around 455. And I also bought some JD call options. So I like to show you guys what I'm doing. And so, index trading and option trading certainly is, you need to be, it's a whole different ball of wax. And the reason I dumped all of my trades, and I talked about it. So we do an early morning session every morning where I talk about the markets before, I'm looking at it. We look at early morning opportunities. And really what I was alluding to is that while we have considerable bear price patterns, we're now in an area that, has a lot of volatility. So whenever you incur a previous area that you've mined before, so you can see today's low, we got exactly to where we got to, a few weeks ago. And whenever you get to these key support areas, you always get a lot of volatility. There was also, President Biden was going to speak. So when these things were coming off this, today, when you're in options and they start coming off, that's when you want to start taking profits. When I'm in puts and the market starts going down, I don't, you don't want to wait for it to go through here. Because very quickly it's back up there, and that's exactly what happened. So early in the morning, the market rallied. You can see that it opened here, it rallied. I sold into that rally. It started to come down. I started to clear off all of my put options, and then I'll look for another space to get in. This is just a very tricky area. When you get to an area where you've had previous support, you can go up and down here and bang in this range for a while. And I imagine this is what we're going to be seeing. Very range bound, very volatile markets. You really need to know how to pick your spots. And so, I got in a good place, and, when the going gets good and I get to a certain area, I just banged out of everything, closed out of everything. And, we'll see what happens. I'll look for any rally again. Market goes back up here again. I'll look to get back on the dance floor again. But I do think that the overall patterns are still very bearish. You can see that we've got a number of, bear price patterns, and but we're also sitting in the support zone. So you've got these very hairy conflicts, and with the global, background and all of these things, it's very tricky trading the indexes. And just like anything else, to me, trading is all about risk and reward. It's about kind of getting in at areas where you can identify your risk. And, the smaller the risk, the better. So the problem with, getting in now, if you just want to get short, the thing is, you say to yourself, well, where is my risk? And, frankly, I don't know. It could be all the way up here. You could see this thing going all the way up here and still be a down market. So sometimes when things like kind of get in the middle now, and I'm a little bit, ambivalent, then I wait for the market to sort itself out. So, there are certain areas where right here, the market put on a double top. So when you get into these areas, then you can start playing with risk reward. So I, started going short right up here. When it closed up here, I went short saying that, hey, this is going to be my risk. I'm just going to risk to a little outside the previous high here. And, this is going to be, my potential reward. So there are certain areas, some are better than others. And then when the market gets going, now you're in the middle of the tennis court where, if you guys don't understand that metaphor, in tennis, you either want to be at the net or on the baseline. If you're stuck somewhere in the middle, then, you have no leverage, you have no idea, how to play that ball. So, we are at this area where there is support. Here's the resistance, and we could literally continue to bang both sides of these ranges for some time. And I imagine that's what's going to happen. We could get into a range-bound condition, but I do think inherently the markets are in a sell condition that you've got to look for selling opportunities. And so just as a hypothetical, if I, look for this thing to go up, I would then wait for a bar to tell me when it's ready to go down. So literally, if I saw, something like this where it goes up, 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 and then all of a sudden I get one of these where, we do what I call a key reversal. It makes a new high, close on the low. That will tell me to get back on the horse again in the direction of this trend. But right now it's kind of in a, no man's land. And this is where, certainly with options, you get eaten alive. So you've got to be very careful about your trades. So I do think that, these indexes still look like they're pointing lower, but they're fraught with all kinds of peril. Now, I've been also looking at individual stocks. Last week, I advised our members, on the Elite program to get short Coinbase. Today, Coinbase was down. What was it down? It was down about 12 bucks. You can see here, it just gapped lower. It closed at 190 and closed at 176. So down about $14 lower from where I advised our members to get in. So Coinbase is, it's a proxy on the NASDAQ and cryptos. And if you're a crypto trader looking at this Coinbase chart, I would be a little bit nervous because this thing looks like it's going to go lower. So this is the chart of Coinbase now. Really what I try and do in all of these sessions, and I know you guys are going to ask me to look at 1,000 charts. If we keep going past one or the other, you'll miss the idea. So what I try and do is look at, when I open up a chart, it doesn't matter what it is. This could be Coinbase, it could be corn, it could be natural gas, it could be gold. The first thing when I open up a chart, I want to say to myself, what is the phase or the condition of this market? If I asked a 6-year-old, is this market going up or down? And a 6-year-old is, they don't think, they don't have all of these, noise in our head like, we adults do. They would clearly see this is a down market, a downtrend. So simply what I'm always trying to do is surrender to the will of the market, get in sync with the market. And this is a downtrend. Now, when trends end, they do put on patterns, and there was a bit of a double bottom here. The market gives you all kinds of patterns and all kinds of head fakes, but this is where you got to understand that this is just a short-term head fake in a long-term downtrend. And so what I look for is what I call the governing or dictating pattern. And to me, the governing pattern is this very large head and shoulders price pattern. And you can see we cut through the neckline, and the head and shoulders is just what it sounds like, where it looks like a man or woman's shoulder, the peak is the head, and this is the right. So now you have a perfectly drawn head and shoulders. Now, head and shoulders is a bear price pattern. When this is formed and it goes through the neckline is simply a line that is drawn through the entirety of the pattern. Once it goes through there, then it effectively starts confirming that this price pattern is on, that it is what it suggests it is, and that we are going to go lower. This is a reversal pattern that suggests that now the market's going to go lower. So what prices are apt to do is they initially break out of, I'm always struggling for some kind of contrast color, where they break out and then they retest. And then if they come through the low here, then you're definitely going to go and make new lows. So it looks like Coinbase is on the way breaking those, recent weekly lows. So you can see that it broke out, and then when it came back here, it put on another pattern in the form of this double top. And again, a double top is exactly what it sounds like. Makes a new high, backs off, retests it, and now you've got this intermediate bear pattern. So you have the head and shoulders here, you have the double top there, and all of these patterns start telling you the market is going lower. So the market actually tells you where it wants to go. You don't have to be an MIT economist. You don't have to be an economics genius. I just look at the tea leaves in the markets, and the market points to where we need to be positioned. And so, Coinbase is now in this area where, it could be very volatile, bounce back and forth, but it does look like the trajectory, the path of least resistance is lower. The other, big pattern we talked about yesterday, the market was closed. I said Tesla's going lower, and lo and behold, the market dumps $50 today. So how did I know Tesla's going lower? Well, the patterns tell you. And to my mind, there's 100 bear patterns in Tesla. There's really, very large double top. Again, if you just look at this, this is just a very large M top, and that top tells you the trajectory is going to be lower. So I just look at price patterns and then look at a set of, discriminating bars that tells me when to get in the trade. And buried within Tesla is 100 little bear patterns. Right here, you have a double top, head and shoulders. Here you have a double top, head and shoulders. Here you have a double top, head and shoulders. So just a multiplicity of bear patterns above this 1,000 level. So it's not surprising we're trading at $800 now. I've been saying, for weeks and weeks to our members, this thing is, going to become unhinged, and we're going a lot lower. Now we're also in a bit of a tricky area where we're bumping up against this recent support. And so again, it's, you're probably going to get 100 head fakes in Tesla, but to my mind, that you need to short the rallies. Enda says, I'm in Tesla. Should I wouldn't take profits. I would, look, what I tend to do in these very volatile markets is I take pieces off. So when, markets go, so this has dropped from 950 to 820. And if you've had a pretty good move, what I tend to do is I just take nibbles off. So I'll, take 20 or 30% of my position, then if it rallies, I'll put some more on and, play certain games that way. So can't get hurt taking a profit. And, if you've got a good profit, take 20, take 30% off. Can't get hurt doing that. This thing could have an $80 rally out of nowhere. This is going to be very, very volatile. But I do think that eventually this thing is going to go substantially lower. So this is how I look at trades, solely based on price action and price patterns. I extracted over $200,000 today just based on looking at patterns like the IGV, which is the tech stock index. We also are in this area of support, but you can see we closed really on the low. It couldn't even pick itself up off the ground, but it's had a pretty good sell-off. It's gone from 370. It's hanging around at the lows at 320. So, it may not give up without a fight. Maybe, some banging around here. But again, to my mind, pattern equals trajectory. And so what I've been alerting our members to is this double top, head and shoulders pattern in the IGV. This is the tech ETF. It's kind of a leading indicator. And again, you see how beautifully, these things break out and then they retest. And now if it breaks this again, now, we're going to head to new levels. So, we are in this area where you had a pretty robust bounce. So, just be caution. You could get a little bit of a rally off here, but to my mind, I'm looking at all of these meaningful rallies to sell into. And so that's what you can see, this little head and shoulders here. We broke out of it. And now, again, we're just, likely to get, a bit of a fight down at these lows. I wouldn't be surprised to see a meaningful rally off here. And this is what I look for to, make decisions on options. And when I talk about options, I'm no expert in options. There's gamma, there's theta, there's all kinds of a science behind options. To me, I look at the underlying instrument, meaning if I'm trying to buy, put options on IGV, I'm looking at the IGV. I'm assessing the underlying instrument as to whether it's going to make a move and whether it's going to make a powerful move and whether it's going to make a powerful move in a very short time frame. And that's how I make a decision to get into an option or not. To take a very leveraged bet on something moving very, very quickly. And so I was, shorting, the IGV, buying these puts all the way down. And then once it kind of gets into these support areas, if you're holding these options and you get a short covering rally, they can take it away from you very quickly. So, options trading is a whole other thing. I'm not going to get into the weeds on that. It's just I make a decision to buy calls or puts based on whether I think that underlying instrument has the ability to move and move very quickly. So that's basically what I've been talking about. So I want to talk a little bit about risk. You can see I had these JD calls too. So I have these BABA calls and these JD calls. Put about 60 grand in these call options today. And, I'm just playing around. I don't know if these things will get off the ground or not, but let me just, I talked a little bit about the pound New Zealand dollar, how in late November, I told our members to buy this at 192. Now this thing went over 204. Recently it's had a setback to 201. I don't know if I want to pull the trigger and get out of this thing. It's, this is what this thing's apt to do, but I think it's in a long-term buy. So I just want to focus for now on the, risk reward parameters. So you can see on this particular outgoing email, and this is an email that, sent to all of our elite members on a daily basis. If you're interested in the elite program, I'm sure our team members will contact you after this webinar series or send you an email or what have you. So in this particular email, I suggested buying pound versus New Zealand dollar. It's an exotic currency pair at 192.77 with a buy stop 100 and what is this 140 pips lower. So you can see my buy stop was 140 pips lower. And people will say, well, there's no way I can take a risk of 140 pips. And that's true if you do your normal position. But what I'm going to show you now is a position size calculator. And you don't have to write it down. I'm going to put it in the chat box here. And this will inform you how to right size your positions based on how much you have in your account and how much you want to risk on a given trade. Now, I always suggest that, you shouldn't risk more than 0.5% to 1%. If I really like a trade, I'll go to 2%. But what most people are doing is they're betting, 2% or 3% on an individual trade, and then they're trading 10 times a day. And so now your risk is going up to 20, 30% a day. And your, stop losses are too close, which means you're going to get banged out on these stops most of the time. And then you can die a death of 1,000 paper cuts where you just slowly bleed to death. What I try and do is inform you to take, try and take a piece out of the bigger moves and trade less. So look for the more juicy trades, the more high value trades, and look to stay with those trades for bigger outcomes rather than being in and out like a squirrel, darting in and out of a tree hunting for nuts. because that is just not the way you're going to, be able to make money in the markets. And it's not my opinion. It's 90% of people are losing their money in the FX markets. And I think one of the primary reasons is they're trading on too short-term time frames and looking for too small an outcome. And what I mean by too small an outcome, that if you're trying to make 10 pips or 15 pips on a trade 5 times a day, you cannot do that consistently. Eventually, the market will just wear you down and you'll just open yourself up to a big loss. Whereas what I try and do is trade less, try a high value trade and stay in that trade, try and make 100 pips, 300 pips, 500 pips. And that's how you'll make money over time. So the way this position size calculator works, and it's exactly what it says. It tells you exactly how big a position size you should have for your given level of risk. So you can use any denomination around the world. These are major currencies. I'm going to assume a US dollar account and an account size of, let's say, $5,000. So you can play with all of these, fields. You can put exactly what's in your account. And also, this is where you put your risk. So if you want to assign a risk, you would express it as 0.5. That's 0.5%, 1/2 of 1%. So literally you could have 10 losing trades in a row and lose only 5% of your account, lose $250 of your $5,000 account. So in that way, you could see how if you're able to preserve your money, this game is all about being there for the next trade. If you wipe yourself out, game's over. You can't play anymore. They take the bat, the ball, and the whole game away from you, and now you can't play. The whole idea of this game is to stick around, because at some point you're going to see that trade that's going to make you a lot of money. And that's really what I try and do. I try and find 1, 2, 3 trades a year that, I can make real sizable bank, $500,000, 7 figures on a trade. And whatever your account size is, whatever the relative thing is I look for 3 trades that are just going to really go for a ride. And most of the time the markets are banging around and eating our mindset up, but there will be a time where the field clears, the clouds, part, and you'll see that trade. And if you got no money left, then it does you no good. So the whole name of this game is to be able to stick around and, have buying power and capital preservation. So if you basically risk 0.5% risk per trade, and you know what you're doing, you should never be wiped out. If you get wiped out with this, then you don't know what you're doing, and you probably shouldn't be playing this game anyways. So you can see in this particular example of the pound New Zealand, so we'll scroll down here to the pound New Zealand trading pair. And in that particular example, my risk was 137 pips. So this is where, they're trying to change this calculator, made it really kind of not intuitive. One lot, the default here is for 100,000 unit, which is a normal lot. Most people are trading mini lots, so you have to do 1/10 of that. So you basically just go, 0.1 and then hit the calculate button. And this tells you that you can do 0.27 mini lots. And even if you, get wiped out on 137 pip, stop loss, all you're going to do is lose $25 of your $5,000 account. And you'll live to fight another day. So you can play around with these things. You want to go a little bit bigger. You want to go to 0.75. You hit the calculate button, and now you can do 0.41. If you've got, a little bit more in your account, you get the idea. It will tell you, how to play around with this. So this is the risk calculator. Now we've also developed a stocks calculator. Our team developed this. Here is the website for the stocks calculator. And again, you put your account size, whatever it is. You want to risk 2%, $140. I don't know why it's not allowing me to The percentage risk, 0.5%. Your entry price is, $113 on BABA, let's say. Your stop price is $111, and you can buy 17 shares. So that will tell you that this is your dollar risk, 0.5% of $7,000. And this is the number of shares that you can allocate to this trade. And you can do it for the short side too, put in the parameters. So it's a really nifty thing. This was developed by our team, and this will really help you determine the size of your trades. Now, a lot of US brokers, I don't know, where you guys are around the world, will allow you doing fractional shares. So if you want to buy 8 shares of Tesla, on US, platforms, you can do that. So these are ways to allocate your risk. This game is all about discipline and risk. We always romanticize where to get in. You see these big moves, but the whole idea is that you need to have some discipline and some control. So Sang says, can you explain entry point? Yeah. So let me just take the chart that we have right here. Now I look at, markets in terms of, energy flow and just really a picture and an aesthetic. And like I said, just very simplistically, when I open up in a chart, it could be corn, natural gas, gold. The first thing I say to myself, what is the phase or the condition of this market? Is it an uptrend, a downtrend, sideways? And in this case, I can say to myself, this is, in a short-term downtrend or a downtrend. And then once I've kind of said, okay, what is the phase? Then I say, well, is there a pattern? Is there a historical precedent, a chart pattern that tells me, what's actually happening in this? And to my mind, there are a series. I see the double top here. I see this whole thing as a head and shoulders. And, then I see that it cut through this neckline. So now to me, a head and shoulders, sorry, grabbed the wrong drawing tool. This is a bear price pattern, right? It looks like a man or woman's head and shoulder. We saw that. And that leads to a negative trending market. So once I kind of hone in on what I think is the governing pattern, then I try and get in sync with that pattern. I look for a series of bars or a particular bar that tells me how to join this trade. So, all the way up here, I was telling our members, this is what was happening. It's like I try and, I can see I've been trading a long time, and I can see these things kind of occurring while they're occurring. I draw these pictures in my mind all the time. And so right up here, there was a series of bars. These are individual price bars right here, where this is what I call a key reversal. And what I mean by key reversal is what I try and observe. And this is a daily chart, right? So this is a daily chart, which means that each one of these price bars represents one 24-hour session. And the reason why I'm not looking at 15-minute charts or hourly charts is that I'm trying to understand what is kind of the big picture, because I'm trying to take a chunk out of the middle, out of these trades, out of big moves in the market. I'm not trying to dart in and out every 15 minutes, trying to guess the next $2 this is going before they take it away from me. And so what I try and do is hone in on the bigger picture and then drill it down to a set of bars that really drills down my risk and reward. And so you can see on this particular day, I'm kind of enhancing it a little bit. I try and look at how does a market close. So this little left slash mark is where a market closes. So, when you see this and this, it's where the market closed. Now that tells me a lot. That tells me in this particular day, buyers try to take it up, but by the end of the day, the sellers were in control. Now that's only pertinent if I'm looking at the pattern and the trajectory, the trend. So, not every key reversal is to be bought. Not every key reversal is to be sold. But if I determine that there is a bear pattern setting up, a head and shoulders, a double top, then I'm going to drill in, and you can see that there's actually two key reversals here, two areas where it made actually a little mini also double top here. So you had this resistance area right here where it couldn't get through. And then to me, the market points when it closes on the low, it actually points in the direction that it wants to go. So you had two closes on the low pointing in the direction it wanted to go. So Sang, whoever asked me, how do I determine the entry? So once I see this key reversal in the direction that I'm looking to be headed, then I just set up my execution strategy, which says, okay, I'm just going to put a pending order, a sell stop, right under the low of that day. So I really want the market to confirm what I'm looking at. So if the next day the market opens and goes up, I'm not going to be triggered. No harm, no foul. But on the other hand, if the market opens up and then sometime, during the day it comes in and picks me up, then I'm likely to be put into a good trade. And now, I can simultaneously set up my trade where I put a sell stop pending order there, what we call a resting order. It's just sitting there, it's waiting to be triggered. And if the market doesn't get there, it's not going to get triggered. And so I then put a stop loss behind there. So I know that if this goes, picks me up, gets going, now I have a stop loss behind it. And if, it kind of goes like this and stops me out, then, oh, well, I'll look for the next trade. But this is how I set up my trades. And this is how you can also, this is what I call effortless trading, where everybody sits in front of their screen for 3 hours until their eyes are crossing over, looking at all these indicators and moving averages and Bollinger Bands and MACD, trying to figure out when it's going to cross over, when to grab it, when to get out. I let the market do all the work. So once I kind of see this area, and this is what I'm talking about. So this is an area, if I was looking at this today, I could understand where my risk is, where this is an area where my risk is much broader now. It's much more undefined. This is kind of the distinction of what I was talking about, where, you can get short here, but, it's kind of arbitrary where you put your stop loss, where if I get short here, I know exactly where my stop loss is. It's right there. So, this is the beauty of this, is that this is your risk right here, very small amount, and that's your reward. So I'm literally taking whatever this is, $3, $5 risk to make $80. So there are certain times where, and if you wait for these times, and this is what I'm talking about, where you don't kind of mix it up here and get caught out there and lose a bunch of money. If you wait for these times where the market tells you there is very little risk, this is where you can make a lot of money. So when I see this, I just back up the money truck. There are certain times where, and I'm always very reluctant to say these things, but there are certain times where there's no risk in the market. And, I've learned to understand those, and that's where I just load up. Now, you're between very broad areas, and it can, literally swing for the fences and, still go lower. So there's a time and place for everything. So here is another, key reversal here. Made a new high, close on the low, you put your sell stop here, and the market just puts you into this trade. Makes a new high, close on the low, put your sell stop here, and now you're into this trade. So this is what I'm talking about. There are areas or times where the market, puts you in where you can understand your risk reward much better than other times. So if you're not in this trade now, while I think this thing is still going down, it could go anywhere, in this, and so really what I would do is wait for this thing to go higher, let it do its thing. And then, wait for a day where, it tells me that this thing is ready to go. And then if I saw this again, I would just back up the money truck and get ready to get going again. So the market is dynamic. There's energy flows. The water, runs out. Market. It's like, the tides on the beach, where you see sometimes it's, the tide's coming in and sometimes it's going out. And so, you just wait for the tide to come in, let it do its thing, and then take it when it's going back out. So I think in markets, of flows. So, the thing is, if you didn't catch this trade and it's gone from 370 to 320, if you weren't there for the wedding, you don't want to be there for the funeral, right? So, to me, what I always wait for now is something where there's a release valve, where the market needs to go up, build some more energy so then it can go back down. And that's, I think, the market in terms of just energy flows. UDEX is, how do you pick your take profits? That's, the idea of stop loss and take profit is a difficult discussion, not because I want to avoid it. It's just because every trade is different, right? Every take profit is different. So actually on a longer term horizon, I'm looking for, a take profit around 260. I'm looking for an area where this thing is probably going to go to 260. And I didn't just pull that out of my shorts. I'm looking at a pattern that I talked about yesterday. It's called the ascending broadening price pattern, where if you connect all of the lows and you connect all of the highs, you have this pattern that goes up throughout the pattern. It starts out narrow and then widens or broadens at the top. And the thing is, once these things break, we kind of know where they're going to end up. Right back here, right back at the beginning. And I'll show you an exact example of that. So to my mind, I still think we have more left in the tank here. But we're at this area, you can see where we had this weekly reversal where, it could catch a bid in here. So, I'm just waiting for a little bit of the release valve to be taken off, and then I get short again. This is an example of how an ascending broadening triangle played out on real-time basis. So this is the pound Australian. And what this should demonstrate to you, it doesn't matter what the instrument is. It can be corn, pork bellies, pound Australian, or the IGV, is that when we see patterns, these patterns repeat. And this is how I'm able to make repetitive assessments on the markets. When I see certain patterns, they lead to certain trajectories. So here's your ascending broadening price pattern. It went up throughout the price pattern. It started out narrow and then widened and broadened out at the top, just like the IGV. And what you'll notice, where did this thing come back to? Exactly, exactly to the number, the bottom. So, these historical precedents show us, how these markets are likely to play out. And then once it did, they put on this double bottom. And once we saw this bull pattern, then you can understand how now it's gone higher. So the market is a dynamic, fluid place. And I look at trends and patterns to put myself in sync with where the market's going to go. And then I just surrender to the will of the market. Steve, I do not use Fibonacci retracements. You're welcome, Sang. So So are there any questions about the methodology? I know you guys will ask me to, look at 100 different charts, but if I go and look at 100 different charts and you miss the point of what I'm really trying to say, it really does you no good. So, really what I'm trying to do is communicate this methodology as best as I can. Now, a lot of it lives in my brain. I've kind of evolved this kind of little mousetrap over many decades of trial and error. I always say that I've written a lot of books on trading, checkbooks. So I've made all the mistakes. I've made tons of losses. I've blown out accounts. And you know what? When I started the pattern trader, I thought I could add some value by virtue of all of my, experience and understanding how the markets set up opportunities, but also how they set up, mouse traps where you fall into these things that looks one way, but it's really something else. And at the end of the day, I just try and look at what is the governing price pattern. So sometimes it gets very difficult where you can see the market, and this is a weekly chart, which means that each one of these bars is 1 week. So you can see after this bottom was made, it went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks, 4 months, nowhere. But the thing is, this is what I'm keying on. So this is how I'm able to, make these big moves, is because buried back in this is, something that tells you which way this is going. And then the market will do everything it can to shake the leaves, get you out, make you lose all your money before the thing goes. And so, that is the challenge of trading. The market does tell you where it's going to go, but then it may take 3 days, 3 weeks, or 3 months before it goes in that direction. So somebody said, well, where's the entry on pound Australian? Well, there were a number of entries, but, and this is a weekly chart. So when I was looking at this on the daily, there were a number of entries. First off, this was a double top on the weekly and the daily. And I was actually shorting it here at 205. And then there was another entry right at 196 when it broke. So you see how these markets, how this broke through here, and then it goes and retests this. This is exactly what IGV did. IGV went to 370, and now it's back down to here. And you can see once it takes this area out, then it goes on to make new lows. So this is exactly what IGV is doing. And it actually sends chills when I can kind of see something and I go, really, is it really going to work out, exactly the way the other one did? Because you feel like, it's like if you know something, then the market's not going to give it to you. So I kind of do all of these mental games, but this is the magic of these patterns. You can see that this thing broke out, and just like pound Australia broke back to the breakout area, and now we're taking this out, and we know what happened to pound Australia. It went right back to the beginning. So, these are precedents. It's like in law, you have his precedents that, one thing tells you or informs you, how to make a decision on another thing. And that's the magic of these charts. Steven says, is it prudent to trade only the weekly or do these patterns? So, I think it's very prudent to trade on weekly time frames. It really gives you the big picture. So you can see here's the weekly head and shoulders right here. You can see here is a key reversal that would have put you right into the game right there. Made a new high, close on the low. All you have to do is on Monday morning, put your stop there, and you're into this trade. So here was another key reversal just 2 weeks ago. I told this to our members. I'm short 2 positions of IGV based on this weekly reversal here. Made a new high, close on the low. All you have to do is sneak your sell stop in there and, go about your day. Let the market do its thing. So, yes, you can look at these on these bigger time frames, because remember, what I'm trying to accomplish is take the bigger moves out of the market. And if you're looking at these compressed time frames, 10 minutes, 15 minutes, A, you can't see the move, and B, you're being juggled around so much, your emotions are just so shot. You can see that this kind of slows it down. You can see the bigger picture. So if you look at things on a weekly basis, it slows it down. It takes the emotionalism out of it so that you can, take out or extract bigger moves. So are there any questions on that? So I mentioned that I bought some JD and some BABA calls. So, I mean, look, this was just a shot. Sometimes I just play around. But I'll take an educated shot. So this is the JD chart on the weekly time frame. Now, JD is very complicated. And really, when something's complicated, it's better not to do it. You should just wait until, it kind of tells you what it wants to do. Because I could make a case for this thing going up. I could make a case for it going down. So you can see in this particular time frame, there's this head and shoulders. And in this particular time frame, there's a beautiful double bottom. And here's another double bottom. And this is also like a head and shoulders. So this is, it's kind of a pick'em. And, this has been so beaten up. These Chinese stocks, I think they punished Jack Ma last night, and then you got the NASDAQ, and it's so beaten up that I'm just taking a shot that maybe there'll be just some kind of relief valve here. And this was just a gamble. I don't even feel good about telling you guys because this isn't a great example of a kind of a high value trade. You can see that this is just straight noise. It's sideways. And really what I try and do is avoid sideways markets. I look for setups that are going to move. But this might have a chance of moving because, I see this Adam and Eve double bottom here. Then I also see this double bottom here. We've kind of come back to this neckline here. And so look, I got in these calls right on the close. And if it doesn't work out, if it just starts going down tomorrow, I'm out. I'm gone. I'll take my losses and I'll punch out. But, maybe there'll be, some kind of this thing's been so beaten up. The perception is so negative. Sometimes when there's blood in the streets, it's the best time to do it. And when the market was really getting punished today, I was buying BABA right into the sell-off. So I'm already making money in BABA, depending on how it opens tomorrow. We'll see how it goes. So I'm just looking at this pattern, these patterns as kind of a pattern that, creates a bottom. But I can also easily make the case that this is a head and shoulders. So, sometimes you have to pick which is the governing or, the main pattern. And this is a punching bag right now. It really hasn't shown itself. And so this is a really bad example for me to show you guys. But since I talked about it, this is, what my thinking is. And then BABA is kind of in this somewhat of a rectangle bottom. Now, normally I would wait for a bigger sign. I would wait for what I call a key reversal. So, you can see BABA has been traversing between this low and this high. So, this is how rectangle bottoms are formed. If it grabs a foothold here and goes up, I'll be able to see, okay, this is how it started. But typically I would wait to do this trade, only after I saw a good sign that this thing really had dug in. Like optimally, I'd want to see something like that, where it makes a new low, like this guy right there, makes a new low, close on the high, and then you can see that there's a good move that ensues. We still kind of close on the low here. We have two gaps. I don't know. I just bought really when it was ugly today. I bought it right at the lows. And I think it's a little bit higher in the aftermarket. Let me just see. Yeah, it is higher. It's trading about 50 cents higher, which doesn't mean much. So I took a stab at these things, but like I said, I feel very reticent about even sharing because they haven't really materialized to anything. But, we'll see what happens. Sometimes when things are so beaten up, there could be a relief, rally. And so I took a shot and, I made some money today. So sometimes I just play, and I shouldn't even share with you some of these bad habits, but again, this is an example of something that you really want to avoid. I want to see something that is going to do that. So, path of least resistance actually still looks lower. You have that double top, you have a double top here, and, this thing looks like it should get punished. But I don't know. Sometimes, things are there's so much blood in the water. I just took a shot. We'll see what happens. I had some money to play with, so I did. And that's a bad thing too. Take your money, wait for a really good risk reward. And how do you interpret the gaps? You don't interpret the gaps. Don't know. Here's a gap. Some get filled and some don't. I can't trade this thing on the basis that this is going to get filled over here and here. It's a long waiting game, and so I don't really look at gaps in any particular way unless it holds it for the day. If I'm looking to get long and something gaps higher and I miss it, then I'll wait an hour and then maybe put a buy stop above the high. And if the gap's not filled, then away you go. So to me, I just look at really broadly what's happening. And if I open this up, this is in a long-term downtrend. There really hasn't been a pattern that changes this downtrend yet, but we are at an area where it's just bumping into a lot of areas of potential support. So if we do hit an air pocket here, maybe something like that could happen. I don't know. It's clearly just a gamble. Pedro says, could XAU USD be a bull track? That's gold. And it could be, everything could be, but so gold has also been trading in this ascending broadening price pattern. Now, when I draw these things, I've learned not to be too dogmatic in interpreting them. Like the pound Australian and IGV, broke lower out of this ascending broadening, but this could go higher. So there was an ascending broadening triangle in the NASDAQ in the heart of the pandemic. It hit the lower end and then went and made a new high. So, these are patterns that now what I do is I draw this structure around prices so that I can kind of, put some boundaries, because if you just look at the price, if you're just looking at this price, all you're seeing is this. So what I try and do is put some broad boundaries. So this is an ascending broadening. You can see how it grabbed a foothold, every time here. It also had all of these key reversals, made a new low, close on the high, made a new low, close on the high. So all these bars were pointing that this thing was going to go higher. So I look for a combination of the pattern and the price action to kind of put me in the direction, of this trade. Now you're at this, major, resistance level. And, so could it be a trap? It could, but it also could be a major breakout. You can see that, if we put another line across here, it recently broke out above this symmetrical triangle here. So, now we're broken out, and it could continue to, just dance around here and get going, or, it could obviously turn. And if it, turned down and started going through 1800, then I would look for a broad move lower. So I'm just kind of monitoring now. I didn't want to do anything. This looks a lot like dollar yen when it broke out, but when dollar yen broke out, it took about 7 months before it got going. So, this is something that's very similar. And once again, you can kind of, see how these patterns operate and start, making determinations about other movements. So you can see that dollar yen was also in this symmetrical triangle. And just like gold, it broke out right there. And then it kind of broke back, and you were wondering, well, if it's going to come back here, and it hung around. And you can see that once it broke out, it hung around for 7 months. So this is a monthly chart. And so you can see that sometimes it takes a while for these trades to give you the move. And that's why you need to keep your money so that, you have enough money. It doesn't churn you alive in here, so that when it gets good, you can take advantage of it. So this is potentially what gold is looking at. When we've broken out of the symmetrical triangle, it's possible that it could, do this chuck and jive for who knows how long. And then we just need to see. So what I do is I put my boundaries around, and then I just observe how do prices, go. And to my mind, I set up a certain expectation that, okay, now we've broken out, prices should go higher. But if they start going lower, then, it starts setting off all kinds of alarm bells. So my response to the markets is very dynamic. I put my boundaries around, prices just like that. And then based on what the market is telling me, I will start, setting up my trade parameters accordingly. Yes, Richard, you missed the risk calculator. It is in the chat box. Devontae says, what do you do so you don't have to watch the chart for hours? Exactly what I'm showing you. Look at the big patterns and just set up your trade so that you don't have to watch it. So this is a monthly chart. You just, we could dial it back to a weekly. So this is the dollar yen, and this is kind of a compressed chart, but it broke out above this descending line. It was for years, it was kind of going, in a descending pattern. And then all of a sudden, so you had these kind of lower highs, and then all of a sudden you had a higher high. It changed its cadence. This was 5 years in one direction of lower highs. And then all of a sudden it changed its cadence and you saw a higher high. But then, you saw it just going back and forth and back and forth. And so how do you play it? So I just, again, look at the price action. And, once I say, okay, this thing's broken out to the upside, I want to figure out how to get long. Then I just wait for these opportunities where price tells me. So you can see this made a new low, close on the high. This made a new low, close on the high. And so you could have put a buy stop above here and your sell stop below the low, and you wouldn't have been stopped out. And then you could have added to your trade, put another buy stop here and your stop here. And now you're into this trade. So basically, I look at the patterns, I look at the price action, and then these two bars, these key reversals in the direction of the trend now, they actually point where the market wants to go. You can see here's another key reversal here, and we're making another one here. So these point in the direction the market wants to go. So S-Run, I don't know the stock EasyJet, so I can't see what you're looking at. Ricardo says, how can we trade with you every day? So Ricardo, I have something called the Elite Program. And after this webinar series, I'm sure you'll get an email alerting you to sign up if you want to. If you do, there's nowhere on our website to do that. Basically, our team member will call you, we'll tell you exactly what's involved. There's no mysteries, and see if this is something that is appropriate for you. So thank you for asking, though. So Adorex says, any thoughts on Euro versus USD? So that's where I'll leave it off. Again, really what I try and point out in these sessions is just a general way of looking at any market. So this was a dollar yen, and I overlaid it over the XAU USD. We looked at pound Australian and the similarities to the IGV, and that's really what I'm showing. Now, we could go through thousands of charts, and if you're interested in that, I do a Friday session called the Underground Trading Session, and that's what I do every Friday, 11 o'clock Eastern time. I have a thing where I go through, a lot of charts, and then, I invite, the participants to ask whatever questions and look at whatever charts they want to. And that's the session for that. This is just an education webinar where I'm trying to give you kind of the high level meat and potatoes of how I approach markets to extract, enormous gains out of the markets. And again, these are not demo accounts. This is, I don't even know how you would simulate a demo account that looked like that. So this is as real as a heart attack. I show you what I do. And so let's look at the euro versus US dollar. I haven't really been trading the dollar a lot. It's just gone into a sideways funk. But again, I apply all of my, my same things to any chart. So this is the euro. Let me just kind of, because there's actually two time frames where it looks similar. And whenever I kind of get two looks the same, I get a little bit nervous that they're going to play out in the same way. So you can see this is the euro versus US dollar. And you can see, the patterns look very similar. In this time frame, you have a head and shoulders, and it broke, and it gave you that. And now it's got a double top and a head and shoulders here, and then it broke. And so, where it goes from here, I don't know. It's, look, this pattern tells you that this should go lower. And so then I start setting my expectation. This is where the market should be going. If it starts going the other way, then all kinds of, red flags start going off in my head. So, I kind of look at, I set up my structure, and then I observe how does the market, play within that structure. So I'm a little nervous that, you have two, patterns that look the same. This one here, this didn't quite go all the way there, and this could turn into a trap. And so, right now you can see that dollar trading is really not my thing. When something goes static like this, which 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks in the same area. 15 weeks is the same price that it was 15 weeks ago. So that's really not my thing. I rather trade, IGV, where I shorted at 400 and now it's at 320. So, once these markets kind of get boxed up like this, I look for something that's moving. So, now I'll just wait to see how this breaks out of here and decide if that's, worthy to hop on that train. But by and large, euro is very boxed up. It does move, you get a three-week move and then it goes into a box again. So I don't really trade the euro a whole lot. And again, I'm only looking for trades that are going to move from one level to the other. And I don't care what that is. Ken says, how do I get hold of a report? Been trying to reach them for months. I'm already in the lead. That's disturbing to hear, Ken. Again, I don't handle any of that. I don't know if you have the right email. Our support team can be reached at support@thepatterntrader.com. And I will let them know, Ken, that you've been trying to get hold of them. And I don't know if you've been trying with the right thing, but I apologize for that. Again, I don't handle any of the back end. I'm just kind of showing you what I do. And then if you sign up, then we have a whole team to help you out. All right, I think I'm gonna leave it there. And I will see you back tomorrow, 4:30 Eastern time. And hope you have a safe and blessed trading day. Thanks, Dwight.
All right, great session, Mark.